Good afternoon. Good afternoon, good evening, good morning, wherever you are. Welcome back. Well, another education series today. This is not market update. Today is educational. Let's learn something. All right, okay. What do I have for you today? What do I have? Well, let me explain to you. Today I'm going to talk about swing trades. Okay, for the people that don't have the amount of time to spend like 3-4 hours every day on the screens. Okay, or they're so anxious they cannot deal with day trading style, which is okay, cool, it's not a problem. So for these people, doesn't mean that the trading is out of the window. Nope. I got a technique for them, and I'm going to use ETH as for an example. Okay, so I'm going to do a combination of how I break down the levels, including some indicators. Why? Well, I'm trying to think the best way for someone that is not very technical, for someone that is quite new, someone that needs extra assistance. Okay, now we all know that all the indicators, 99.9999, all the indicators out there are lagging indicators. Okay, lagging indicators means are not real time. They need historical data to do the calculations. Okay, so there is no way that's going to be leading indicator. It's going to be lagging indicator. It means the indicator will give you some value, an idea what's going on after that it happened. Okay, but there is a way how we're going to use that in our advantage. So I don't want to waste more time of yours. My name is Freedom. In case that you don't know me, welcome, and let's start immediately. Right, okay, this is ETH. I put a label here, ETH against USD. Alright, here it is. So we all know now. Here it is, ETH. Okay. Now I want you to focus on the 2-week chart. Okay, so I'm using 15 days. Okay, 15 days, half of the month. Okay, now why 15 days? The reason I'm using 15 days because you may want to use this technique or strategy or tactic, whichever way you like to say it, call it, for the tokens that maybe don't have that much history. So 15, I found a solution that 15 is good enough for all tokens, obviously, and for the new tokens. Now, that's a small thought. If someone's going to be investing like mid-term, long-term, kind of in between, because you're going to be a swing trader. What does it mean, a swing trader? A swing trader means he's trying to catch as low as possible in one area and to get out as high as possible, right? He ignores the in-between noise. He wants to get as low as possible and sell as high as possible on one swing, right? Swing low, swing high. Okay, so imagine that you are on the playground and you want to jump on a swing. Okay, so here's the swing and you just ride the swing to the top. Okay, bottom to the top. So you're a swing trader. Okay, you want to catch as low as possible and to get out as high as possible. Okay, so for you to have a trust to a token, it needs to be a solid token. Okay, you cannot do this in a token, a meme coin. For example, I'm speaking now as December 2024. That meme coins is like a kind of thing right now. Okay, so it's on a hype. You cannot do swing trading on meme coins that have no data because they've just been created this past month or 2 months ago. So it's not enough. There's not enough data for you to use the indicators. So I'm talking for something more solid like ETH, for example, maybe Solana, maybe AVAX. I'm talking about tokens and projects that are quite big market cap tokens that they have some history behind it. Okay, so you can trust that token and you have some good probabilities for the for the future ahead. Okay, that's why you want to be a swing trader. So let's have a look. This is ETH, very solid token. Okay, this is number 2, and also it has a lot of data. If I go back, we can go as far as 2017. Okay, now let's talk a little bit about how we're going to break the levels. Okay, you know that I'm using my own tool, which is called Gangster Fib. It's based on the Fibonacci tool, but it has custom settings. So I'm not going to go into details. You're going to find a video on the channel that says Introduction to Gangster Fib. Okay, you're going to find it there. I explain everything. So let's say I'm going to use the tool, and I'm going to use the previous cycle top to the bottom, right? This is ongoing. It's not finished yet. So this impulse is ongoing. I would like to use the previous top to the previous bottom. This is a complete cycle. Okay, the cycle is like going up and down, so I'm using the bear market. Okay, can you use the very bottom to the next top as a fractal because you see a decent correction? You can, of course you can. Okay, but let's stick to the basics, right? People that are using Fibonacci tools, they're going to be more familiar with this approach. Okay, the last top to the last bottom. So let's go ahead. Right, here's the very top, and this is the very bottom. I'm going to expand this to the right, right, a little bit to the left if you want to compare anything. Here it is, and just to make sure, I'm going to lock it so it doesn't go anywhere. Okay, no drifting. Now you got the levels. Okay, you know how I go about these. I'm watching each level and I go by level. Okay, and you can see even if I move away from the 2-week and go back to the weekly, you can see how these lines can help you, understand what's going on with the price action. Okay, how price action is reacting to these lines. Magic, right? Okay, cool. Technically, this is a small hack of mine how to break down the algo that runs that chart. Okay, anyway, I'm not going into details about that. So here's your levels. Okay, now when and how you're going to know when is the bottom, when is the right time for you to enter, and when is the top for you to know that it's the right time for you to exit. Remember, you're a swing trader. You want to identify the lowest point as possible, right, for you to identify it as early as possible for you to enter. And then when you're going to reach the top, which is the best time for you to get out. Okay, so for this exercise, I'm going to use 3 indicators. Number 1, stochastic RSI, or I call it SRSI. Okay, second one is going to be the RSI, and the third one I'm going to use is going to be the ASO. Now I have a template here, and here are my indicators. Number 1, RSI, stochastic RSI. Number 2, the simple RSI that majority of the people know. The third one is ASO. What is ASO? How do you find it? You're going to find it only in TradingView, not in the exchange. Okay, inside the exchange they do not include ASO. ASO is average sentiment oscillator. Okay, and it has already 5,329 downloads. Okay, and the last one I got volume delta, which is not part of the technique, but it's there for you to see. Okay, so settings. Let's go very quickly to the settings. Stochastic RSI, very simple settings, as it comes from default. Factory settings, no change. KND at 3, RSI length and stochastic RSI length 14. Right, time frame, follow the chart. All I've done is I've changed the style. Okay. And also there's a little bit, there's a disclaimer here. I push the limit a little bit higher, not 80, 90. And at the bottom, not 20, at 10. That's the only tweak that I've done with stochastic RSI, apart from the colors. Okay. RSI. Let's go to the RSI settings. I remove the AMA, which is the average. Okay, so I'm removing the average. I keep the RSI as it is. I push a little bit the limits from 70 to 80, the upper band, and the lower band from 30 to 20. And then I mark my overbought gradient field with red and oversold gradient with green. Okay, just to give you that nice look, red color. I've seen a lot of comments, people telling me it looks like fire. Yep, it's burning you, baby. Right, and at the bottom we got ASO. Oh, let me go back to RSI. Just forgot to mention. Go back to input. Nothing has changed. It's as it is, default. Okay. Why I don't have special settings for it? I did try many settings, and I came to the conclusion that if the majority of the people are watching the original default settings, then I should be watching that as well, because I want to see and I want to know what they see to use it in my advantage. Okay. Right. Okay. ASO, it's simple. 10 and 0 default, only the style. Okay. Now ASO doesn't have names. It's go plot on the top, plot at the bottom. So take the top as a positive and take the bottom one as a negative. Right. So that is your green goes up, and that's your red goes down. Okay. So whatever you see gold is going up. Whatever you see silver is going down. All right. That's the nice, plain, simple colors that I use. I'm staying away from the psychological fear colors like red. Okay. It's fear. I don't want to use fear colors here. I do have a red, but not in my candles. Okay. I've got red for other things, to draw my attention, not to bring fear. Okay. Right. Okay. Now, let's go back to 15 days. Here we are. 15 days. We broke down ETH. Okay. Based on the previous correction, deep correction, the very top to the very bottom. Here we are. Now, when will you be interested to enter in the market? Either in spot or either in futures. In spot, you know there's only one way. You only can buy, and you can go only one way to the upside. Okay, and you need to sell on at the very top. So, what's the magic? The magic now is here. You need to watch out on stochastic RSI. You need to be at the very bottom, as low as possible, below 20. Okay, let me maximize that. Here's your stochastic RSI. The only area that I'm interested is down here. Okay, under the level of 10. This green line is under the level of 10. And what kind of conditions I'm looking at? I'm looking for the cross-ups. So let me put my marker. Cross-up happen here. Cross-up happen here. A cross-up happen here, 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 here. I'm interested in the cross-ups that happen under the level of 10. You have a cross-up up here. It's not bad. It's not ideal. You have another cross-up here. Not bad. It's not ideal. Okay. I'm looking for the cross-ups that is happening under the level of 10. Okay, so that is your first condition. Okay, second condition, let's go to stochastic RSI. Sorry, to the simple RSI. Now, zoom out a little bit, and this is the whole chart. I want you to focus at the lowest part, these areas. Okay, I want you to pay attention to these areas. I want you to see and observe when RSI is turning around, okay, as low as possible. This is low, not as low as possible, but it's low, okay. It did not manage to reach under the 20 on the 15 day, okay, that's okay. The minimum that it can go was 33. So technically anything under 50 or close to 40s or under 40s is good for you for ETH. Okay, the numbers I'm telling you now is not a generic number for all the tokens. You need to do the same observation and analysis for each token. Okay, for ETH around this area. Okay, so if I mark my rectangle, you see there's been highlighted 33 and 45. So I'm interested when RSI is going to be between 45 and 35 on the 15-day, and I want to see when RSI is turning around. Okay, that's the conditions that I'm after. I'm after when RSI is turning around. So from downtrend, it turns around to uptrend. I'm looking for that kind of event. Okay, this is what I'm after on the RSI. So let's go back to the charts and let's talk about the ASO now. Okay, here's your ASO. Remember, the gold is positive, silver is negative. I want you to focus. Let me put a line here on 50. So I put a line here on the 50. Make sure that it's on 50.50, right? And I want you to ignore anything that happens under the line for the time being. Okay, I want you to focus on anything that happens above. So to help you, I'll try to mark out the area. Can I blank the area? Kind of. I can. If I bring this forward, visual order, please bring it forward. Okay, so now you don't see anything that happens below the 50. Okay, so it's hidden. Nice, cool. Right, here it is. It's gone. Okay. Let me make sure that it's 50. Here it is. Anything below 50, you don't see it. So what I want you to focus is what is above 50. You have the gold. What does it mean? Well, when the ASO is rising on the gold, it means that the price action is going up. Okay. When you see the gray going up, okay, as an action, you need to understand that the price action is pushing down. So kind of is telling you that the negative force is rising. So the price action is going down. Okay. When the gold goes up, price goes up. When the silver goes up, the price goes down. Okay, we're going to compare that with a price action. I promise you, we're going to do this comparison. But I want you to pay attention. Now that you know what each color represents, I want you to remember that ASO, we're looking when we're losing the tops. So ASO positive, the gold, it goes up, right? Price action goes up. When that stalls, it cannot go any further higher, then this is a time that ASO is trying to warn you that the price has no momentum to continue any further up and is losing momentum and it's coming down. All right. Now, if I remove this box, you're going to see a mirror image, right, with a silver. Exactly the same thing as a mirror. That's why I don't pay a lot of attention at the bottom. Okay, that's why I want to make sure that you understand what's going on above the 50. Okay, it's a mirror image, so it doesn't mean anything, you know, differently. Negative is going down. What does it mean? It just, you know, price action. The negative, they're losing steam, right? Nowhere to be seen. Why? Because positive is going up. Exactly the same style, exactly the same graph in negative mirror. Okay, so don't pay a lot of attention to this. Pay attention who is above, okay, and who's losing the top. When you see that it's losing the top, this is when you understand that the negative force is rising. Okay, now we're not interested to cross this. That event, if you search on the internet about ASO, a lot of people are going to talk about the crosses. It's too late for me. Okay, I need to know before that. So when I lose a top, that's the area that I want to be interested. Okay, and each top color, you know what it means. When the gold runs out of steam, it means the price cannot go any further up. When the negative, the silver, runs out of steam, it means the price cannot go any further lower. Okay, now you know. Now, what do I want you to do? Let me remove delta to be out of the way for the time being to give more space. Now we have the three conditions. Okay, here we are. I can minimize a little bit the, can I? I think I can. Well, I used to. Anyway, let's put that up there. All right, we're gonna go back to the price action a bit later. For the time being, I want you to use three conditions together. Remember, when RSI is at the lowest, when stochastic RSI is at the lowest and we have a cross-ups, okay, and when ASO, the negative, is losing steam. So roughly, that's the area that I'm interested. Number one. Number two, here. Number three, not really. This is not a condition. Why? I have a cross-up. Stochastic RSI is not at the lowest possible, and on the top I've got golden. So this is not a good condition for me to look at. I need three conditions to confirm and, you know, say the same story. Stochastic RSI as low as possible, RSI as low as possible, and the negative ASO to be on top and losing steam. Okay, and another condition is here, and another condition here. Okay, it's not ideally on the RSI, but ASO is here for me to tell me we're losing steam. Stochastic RSI, you have a cross up, and this is the lowest part of the RSI recently. Okay, so 1, 2, 3, 4, 5. Now let's go and investigate on the price action alone. Let's go here. Let's go to the very start here. Okay, look what happened after the vertical. You reach the bottom and you start pushing up. But how much? From here to there, roughly 283%. If we go all the way up there, 300%. If I take the bodies to bodies, just to give you the benefit of the doubt, 265 average. Okay, that is out. Next one. Okay, we're talking about the entries. I'm going to talk about later the exits. Let's first understand the entries, and then we can talk about the exits. After the vertical, what do you see? A 5,000% rise. Next one. You see from here to there is 81, to there 92. Okay, if you're going to go all the way up there, 250. Okay, what about the other time? From here to there, 150. And the last one, the most recent one, from here to current price, where we are now, around 70%, 67 to 70%. Okay, now you got the idea what's happening when you mark three conditions at the same time. The lowest points of RSI, stochastic RSI, and the lowest point of the negative of the ASO, yeah, when it's losing steam, when it's telling you that the price cannot go any further lower. Okay, now you know the entries. I hope you understand this. I hope you get it. Okay, then let's talk about the exits. The exits now is going to be exactly the opposite. Okay, I want you to exit after a nice entry. I want you to exit at the extreme high of the RSI. Here's your stochastic RSI, extreme high crossing down, and this is the extreme RSI turning around, and this is the extreme high of the positive ASO that you cannot go any further up. That is your exit signal. Okay, and your first exit signal is going to be here. Second exit signal that I would like to speak and talk about, it's there. Okay. Now, before I go further up and before I let confusion come up, a lot of people are going to say to me, which one I'm going to take, the first one or the second one? Well, if I put the replay button and you have no idea what's going to happen next, that will be your first bet. You know that you're on the extreme high. Stochastic RSI is crossing down, RSI is dropping, ASO is dropping. What are you going to do? Exit. Okay? And sometimes it happens that you see the price action comes down and then push up. However, the RSI is giving you a lower high. And what's that? A bearish diversion. It's a trap. Okay? It means it's going to come down crashing. Okay? Remember, the indicators, never mind that it's lagging indicators, when you have price action doing exactly the opposite of the indicator, that is a warning sign, and you need to be careful and pay attention to the indicator telling you this is not good sign. Yes, it's pushing. A lot of people, they're going to feel good about it, but they're going to get slaughtered. So in that case, it's better for you to be safe than sorry. Get out on the first one, and then you can do trading in different style, like a day trader, and you use level by level with a gangster fib. Okay? But I'm focusing on the swing trades. You need to get out at the safest point. Again, on the next one, you got out on the first round here. Okay? You lost that one, it's pushing further up. That's divergence. Okay, 3 divergences in a row. And then come down crashing. And then here you have RSI as low as possible, a crossover stochastic RSI, ASO negative, cannot go any further up. And this is where you want to pay attention and get in. And when do you want to get out? On the extreme high. And where is the extreme high? It hasn't come yet. Okay, it hasn't come yet. You don't have the extreme reds yet. Here, just barely touched the 80, not even touched the 80, and then it came down again. Okay, but it's not over yet. It's not over yet. Pushing up again. Look, the RSI, there's still an uptrend. Okay, stochastic RSI is giving you another heads up and say, hey, you can add more money into it. We're going for another push. Okay. The same thing with the previous stochastic RSI cross up is telling you this is not the end, you can push further up. Okay, now can you rely on one indicator alone and say I need to be a pure swing trader and I want to get in and out as soon as possible? You can do by using the stochastic RSI. Okay, but I think you're going to waste a lot of time in and out with only alone with stochastic RSI. The entries has to be as low as possible on the stochastic RSI and the RSI with the help of ASO, the confirmation telling you, yep, this is the gray, I cannot go any further lower. That's a good area for you to pay attention to. That's another area, that's another area, that's another area, and that's another area. So you've got 1, 2, 3, 4, 5 points. If that is being confirmed with stochastic RSI and RSI, you're good to go. On the exit, you just want to do the opposite. Okay, cross down when RSI is losing it, and when the positive cannot go any further up, it's telling you I'm running out of steam. Do you want to do like pure swing trader in and out? You can do it that way. Okay, you get out on the peaks of the stochastic RSI, on the peaks of the RSI, and on the peaks of the positive of ASO, it cannot go any further up and you get out. Okay, so we spoke about the entries as low as possible, and we spoke about the exits as high as possible. Now, a small reminder, when RSI is going up into the maximum extreme, over 80, over 90, goes to 100, it goes flat. What does it mean? Is it time for you to exit? No. Okay, when RSI is stuck to 100, it means it's full power. When you're going to be interested to get out? When it's dropping, okay, on the RSI. And also stochastic RSI when you have a cross down. Only that kind of event you're going to be interested, okay, on a cross down, not when it's going up and not when it's stuck to 100. You need to see a cross down, okay? And the same thing when it comes down, it means the price is coming down, is losing steam, momentum. So the bulls are picking up momentum, okay? The bears, and the bulls lost it, the bears are picking up. So when it's going to go to zero and goes flat, that means the bears are full power. The bulls are nowhere to be seen, okay? But when you have a cross up, okay, this is the event that's telling you that the bulls are showing up and the bears are losing steam, okay? Only for the crosses, you're looking for the stochastic RSI, okay? Otherwise, when it's trending, it means power, okay? 0 to 100 is power for the bulls. The higher it goes, the more power they have, okay? On the opposite side, excuse me, from top to the bottom, it's the bears are picking up power. The lower it goes, the stronger the bears, okay? It's exactly the opposite. So you don't want to take any action while it's trending. You need to take action when it's turning around, okay? When that turns around, okay? Not even when it's flat 100 for the bulls, not even when it's 0 flat for the bears. That is a little reminder, a little trick for the stochastic RSIs, okay? And that's the strategy. After that, you just take the levels and see where you find the support and when you're flipping the resistances into new supports, right? Goes here, resistance, comes down, finds support above this area, and then it's turning around. This is for you to monitor the levels, okay? It's going to help you to see the levels when it's flipping, okay? This is the lowest level of the price. Is it possible for you, let me mark this, is it possible for you to know this? Because if I go to replay, it means you don't see this, okay? So let me blank this out. You're not supposed to see this, okay? This is what you see. You see only a downtrend. How do you know what's going to happen later? So let me put this on the front. Visual order, bring it to the front. So here you are, and you only have the downtrend. How do you know this is the end of the downtrend? This is where the indicators are going to come and help you. When you see that stochastic RSI hit flat bottom, but also the RSI, the simple RSI, is getting as low as possible. Okay, you see that the RSI, as it was coming down, it turned around here. Is it the bottom? No. Is it doing a correction? Yes. Turning around, bottom? No. Is it doing a correction? Yes. This is the lowest. If I turn around to the left, this is the lowest as it's been in the past. So this is the area that I need to pay attention. Remember that we marked the lowest. Zoom out a little bit and you're marking the lowest. You need to pay attention to these levels. Okay? You need to make sure that you pay attention to these levels and you know when it's the lowest. So I say, okay, I'm getting into the buy zone of the RSI. Stochastic RSI as low as possible. ASI, I see the gray is losing steam. If you miss it for a couple of days, it's okay because you're looking at 15 days. You've got plenty of time. Each candle is 15 days. So if you got 2-3 candles here, it means a month and a half. So you have plenty of time. No time for FOMO. No time for fear. Okay? No space for the emotions. Okay? And you're gonna scale in. Right? You're a swing trader. You want to scale in. You go in as low as possible, and then you're gonna add and add and add and build up your position. And then with the help of the gun box or the gangster fib, okay, the levels, you just need to monitor. You just need to monitor the lower levels. It's going higher, comes down, trying to retest it, and reclaims this level. It never went as low as before. So okay, that's good. It pushed up, comes down, finds support, and now it's pushing. Break the previous highs. Comes down, new support up over the previous resistance levels. And you're building up your confidence. and goes up and goes up and goes up. And each level, especially the 50, you need to monitor that you've passed over the 50 and now the 50 is acting as a support. It lost it a little bit, but it reclaimed it. And that's a good sign. Every time that it goes down in the dip, you just buy more. Okay, you just add to your positions. That depends on your style. How often you're going to go in and out on the swing trade. Are you going to wait for the big one, or are you going to swing every time? Meaning that this is your, let's say, small swing high, swing low, swing high, swing low, swing high, swing low, swing high, swing low, swing high. It's like 1 trade, 2 trades, 3 trades, 4 trades. Maybe you want to do this. But if you're not so confident and you're not sure yet, you can move to a monthly, use exactly the same technique. This is the lowest as possible. This is the lowest possible. ASO is telling you around this area, I cannot go any lower. It's confirmed. And it goes higher and you get out at the very extreme high. RSI is not extreme high. It's just above 50. It's around 70. Not even 80. Not even, just a little bit higher. So what do you have now on the monthly? Okay, another cross up, another RSI pushing, it got bounced from the 50, it's pushing up. Okay, ASO, a little bit weakness here. I'm trying to tell you, I'm trying. It needs more data from the price action for the ASO to turn around. Why? Because this is a monthly. Remember, lagging indicators, it takes more time to print. Okay, so that's why I say that maybe the monthly is too big time frame, too higher time frame. It goes towards the investors, not for the swing traders. Swing traders will go a bit lower, maybe something between a week and a 2 week. You can do that on the weekly as well. Okay, same conditions, same practice, but it means you're going to trade more often. If you don't have the time, go to 15 days. 15 days is quite safe. Go back to 15 days and you use the same exact conditions. Entry, stochastic RSI has to be as low as possible, RSI as low as possible, and ASO negative to tell me that it cannot go any lower. In combination with a gangster fib telling you this is a support. Okay, and the price action is now above the green line, which is the lowest of the bear market. That was the lowest of the bear market. Since then, it has not touched it again, and it's claiming levels. And for your exits, same thing. When you reach the very top, when RSI is reaching the very top as well. Okay, and when the positive ASO is telling you with the other conditions that, hey, 3 on 3. Stochastic RSI is on the top and crossing down, RSI as close as top, not on the extreme high, not even 80, but turning around, so ASO. So you say, hey, should I take some profits? Book my profits, and then when it's going to stop the falling, I can add again all these profits that I took from the top. I'm going to put it back. Some of the profits. You're not going to close full 100% of the position. You're going to close, I don't know, maybe 50% of the position. Well, the remaining 50% of the position, you know what's going to happen? You're going to add them up here. Okay? And then you're going to ride for another push up. Okay? So, that's it for me, folks. Ladies and gentlemen, I hope you liked it. I hope you find some value. You know how to use the gangster fib. If not, you're going to find the link at the end of the video. Now you know how to combine it with indicators into medium to long term mentality. Okay, you're going towards swing trading. Okay, so drop the comments below if you understand it, if you have any questions, if you liked it, if you didn't like it, drop a comment. I would like to see positive and negative comments. That's the only way I get better. If you liked it, thumbs up. If you don't like it, thumbs down. It's fine by me. Okay, I don't go crazy about the likes. If I see some negative likes, I want you to write on me and say what you didn't like so I can fix it. Okay, because just with a down thumb, I cannot understand what you didn't like. Maybe you didn't like the music. That's what I'm saying. Right, okay, so that's it for me. Another educational series is over. This is something for the swing traders. Okay, someone that doesn't cope with day trading is fine. You can trade either way. Okay, that's it for me. Take care, be safe, and I'll see you around.